Markets are getting slammed tonight. Oil just spiked more than 20%, stock futures are falling, and panic is spreading across global markets. But here's the real question. What are the charts telling us about Bitcoin, gold, silver, and the stock market right now? Let's break it down. Right now, S&P futures are down about 1.5%. And the key thing to notice is that major support was already broken on Friday. When markets break a critical level like that, it often signals more downside ahead, which is exactly what we're seeing as futures open tonight. Technically speaking, the S&P had been trading inside a parallel channel for months. The market touched the top of that channel last year, formed a rounded top, and that pattern usually signals institutional distribution, meaning big money slowly unloading positions while retail investors keep buying. Now that trend line has broken. The next major support zone to watch sits around 6,550 to 6,530 on the S&P. That level has acted as a major pivot point before, so if markets continue falling, that's where buyers may step in. However, the direction from here is heavily news-driven. Right now, the biggest driver is geopolitical tension involving Iran and the United States. If headlines suggest de-escalation, markets could bounce quickly. But if tensions rise, volatility will likely continue. And there's another major issue forming in the background. Recent economic data already showed warning signs. Non-farm payrolls came in weak, inflation data like PPI and PCE came in hotter than expected. Now add the surge in oil prices, which just exploded higher this weekend. The problem is simple. Higher oil, higher inflation, slower economy, weaker growth. That combination creates the dangerous setup known as stagflation, and markets hate stagflation. Oil briefly surged above $111 per barrel, jumping more than 20% in a massive spike. Even though prices have pulled back slightly toward $105, the move is still extremely aggressive. Historically, there was an old saying among traders, the cure for high oil prices is high oil prices. Why? Because when oil gets too expensive, it slows the economy, reduces demand, and eventually pushes prices back down. If geopolitical tensions ease even slightly, oil could fall sharply. Now, here's something interesting. Despite all the chaos, Bitcoin is actually holding up better than many other assets. Yes, it pulled back recently, but it's still trading roughly where it was a week ago. Meanwhile, the S&P 500 is lower than last week, gold and silver are lower than last week. That relative strength is worth watching. As long as Bitcoin holds above roughly $62,000, the chart structure remains intact. And ironically, the extremely bearish sentiment around Bitcoin right now could actually support a bounce in the near term. Gold warning signal. Gold is starting to show a bearish flag pattern, which typically signals another leg lower. This is especially interesting because geopolitical conflict usually causes gold to rally. But right now, it's not. That lack of strength is a warning signal traders pay attention to. Silver is showing a similar pattern. After getting rejected near resistance, it's now forming its own bearish flag, which could lead to a retest of the $70, $71 area. If the bearish momentum continues, deeper levels could come into play later. So right now, we have a very fragile situation. Stock markets breaking support, oil surging due to geopolitical tensions, inflation already running hot, and traders starting to worry about stagflation. At the same time, Bitcoin is quietly showing relative strength, while gold and silver are struggling near term. The next moves will likely depend on headlines and market reactions over the next few days. If you want more real-time breakdowns of gold, silver, and global markets, make sure to subscribe and turn on notifications.